Hello and welcome back to Dirty Boots Capital. Today, I'm very excited to have on the show Lynette Zang. I am a huge fan of Lynette's. She is a world currency expert, and she is also an expert on gold and silver. So we have a lot to talk about and cover today. So welcome to the Dirty Boots Capital, Lynette.
Tony, it's very good to be here. Thank you so much for having me. I really, we've spent some time together on a more personal level when we were in Florida, and it's been great getting to know you and other places too.
Yeah, absolutely. One of the things I love about our conversations is, obviously you work in the, I'm going to say the gold and silver industry, and but your personal passion for this and for specifically helping people understand what's going on in the world today is huge. To be able to chat with somebody like yourself who's going through this just like the rest of us and trying to figure it out just like the rest of us, it's really heartwarming to find somebody that knows that in my life to be able to help me out. So I appreciate you.
Thank you. But I've been groomed for this moment in time by the universe or whatever. So I'm really just living what I'm supposed to be doing on this planet.
Excellent. Yeah. So I want to kick it off with, so I don't know how many of the viewers know what's been going on with the global reset. And if the viewers aren't familiar with it, hold on to your seat, folks, because Lynette is going to blow your socks off with what's happening with the global reset. So let's start there. Lynette, help us understand a little bit what's going on there.
Well, we're in a fiat money system, and the translation of fiat is by decree. So the bottom line is this is government-based money. And government-based money, if you have a dollar bill, it started out at actually a dollar would buy a little bit more than a dollar's worth of goods. And now officially there's 3 cents left out of that dollar. Now on top of that, so number one of the tools that central bankers had was there was value, purchasing power value in the currency, and now there's basically none. Yeah. And the great experiment was the regulation of the rate and speed of inflation, and inflation is actually baked into the current system. And so what the central bankers do is they regulate the rate and speed by using interest rates. And since 2008, which is really when the system died, they've been anchored globally at zero. Yeah. When up to that point, when we would hit a recession, they would drop interest rates 5.5%, 5.75%. That would stimulate borrowing and spending, right? Yeah. And so if you're anchored at zero and you have to really stimulate the economy, well, we've all seen negative rates, which is actually about attacking the principle. So we have to reset the global system because, frankly, the current system, there's no purchasing power left and there are no tools left.
So definitely one of the interesting things I've been trying to just kind of wrap my head around is, the politicians, right? We all know when they come out and speak, they say we've had this booming economy for the last 15 years. And we have, in terms of this, so the stock market has gone up and, the housing market has gone up. But typically in a booming economy, your interest rates go up, right? Your Fed funds rate would go up. Why have they kept that so suppressed for the last 15 years?
Because, well, first of all, because the system died in 2008. And everybody's been anchored at zero. And when they're really talking about a booming economy, what they're really talking about is forcing people to spend more and more. Inflation is part of what makes the economy look like it's booming. So we should be doing real well, right now. But when they talk about the GDP numbers, there's a big element in there that is purely based upon inflation. Because what happens is that inflation causes nominal confusion. People don't understand inflation. So, if you had a $20 bill 10 years ago and you have a $20 bill today, nominally they're identical. They're both $20 bills. Yeah. But what that $20 bill would buy you 10 years ago, what it buys you today are vastly different. So if you have to spend $40 to get what you used to be able to get for $20, that is officially a booming economy. Garbage.
Yeah.
We've had, even in the last couple of years, we've had what they call a K-shaped recovery, meaning that the vast majority of people have not been doing well. It's just those that hold those assets that have been targeted for reflation. And mind you, back in 2008, the central banks, or 2009 as they were trying to get us out of it, actually came out and said that we are targeting stocks and real estate for reflation. So when you say, yeah, they've been booming. Yeah, they have been booming because they've been targeted, but so much of that growth has been on debt. And that's why they can't raise the interest rates, because fewer people would borrow and spend. And that's not what they want. They want that inflation.
Yeah, so one of the things I'd like to do is share I'm going to share my screen here and share the balance sheet for the Federal Reserve to drive home the point to the viewers in terms of what's actually going on, what you're sharing. So, we've had, prior to the pandemic, the Fed's balance sheet's been around $4 trillion. And then just recently, during the pandemic and since, the Fed has just been spending, putting money into the economy, more and more money into the economy, right? So to your point, that is devaluing the money that is in our pocket, right? That $20 bill, to your point, because there's more of them out there, my purchasing power has gone down, right?
Substantially, yes. And you're in the Fred. Can we go back to that chart for just a second?
Sure can.
Okay, so let me kind of point something out, because prior to 2008, the Fed's balance sheet that we know of was roughly 800 billion. So when you refer to the 4 trillion, they pretty much quadrupled it in a few years. And you see that little dip when they tried to run off the balance sheet, and they made an attempt to raise interest rates. Yeah. Well, that led us to September 2019, when the money markets, that people put their money in thinking they're like savings accounts, froze. And that is actually in process again right now. So all of that additional stimulus, what they call stimulus, absolutely devalues the currency and makes the people that really can't afford it have to spend more for necessities like food. I mean, food went up 40%, right? Now it's going up even more.
Yep.
And, and gas in your tank. I mean, I just went, and here in Phoenix, it was, I think it was like $4.65 a gallon or something like that. I'm hearing in California, it's over $6 a gallon.
It's insane.
Well, I can afford it. So, it doesn't really impact whether or not I can buy food or go out or do something. But a lot of people can't afford that. And they have to make those choices between two key necessities, because you got to have gas so you can get to work.
Yeah, you're absolutely right. I mean, prior to recording this, you and I were just chatting about, the commodity prices, right?
Yes.
It's just, you look at wheat, right? We're all familiar with lumber. There's been a lot of news stories about lumber prices going up, and they're still at, high levels, right? But you look at wheat, you look at some of these other commodities out there, they're just skyrocketing, right?
Right. Exactly.
And it's going to eventually get more and more into, the food that we buy, right? Into the groceries, into the bread, right? Right now we're saying in the wheat commodity, but that's going to translate into what a loaf of bread is going to cost, right? It may take a couple of weeks, or it may take a month or two, but it is going to hit us.
Oh, no doubt. And we're already up there. And it's not just that, it's oil, which they use in, for tractors and for transportation and everything. It's natural gas, which again, so all of these elements that they use for the production of food, or the production of catalytic converters, or the chips, or all of these things that we take for granted in our daily lives, they are exploding in price. And it isn't just the inflation that is a problem. Do you remember, not that long ago, maybe a year, I'd have to go back and look, when Powell came out and said, even though they had not been able to hit their 2% target of inflation for 10 years or so, 12 years, now we are going to target an average
Yeah.
of 10% or 2%.
Yeah.
And at that moment, I said, I hope you're all ready because we've got some massive inflation that is coming. And now he's saying that this should dissipate, the inflation should dissipate by the end of this year, the second half of the year.
Yeah.
Garbage.
Yeah.
Garbage. It's not transitory. It's going to your point, it is going to get much, much worse. And there's even a bigger risk, and that is a derivative risk. Now, a derivative is a leveraged bet that whoever buys or sells the derivative or buys the derivative has no access to the underlying asset. Mm-hmm. But it might take something and leverage it 1,000 times, which means, for those that don't understand leverage, debt upon debt upon debt upon debt upon debt, right?
Yeah.
And when the prices are spiking like this, either up or down, so when the stock market is falling or when these commodity prices are spiking, what's also happening is that those underlying derivative bets that are just contracts are starting to unravel in a very big, pervasive way. And we are all incestuously intertwined on a global basis. So we're going tit for tat with Russia right now. It's not like Russia doesn't have their weapons, and it also isn't like they haven't been preparing for this, reducing their dollar holdings, increasing their gold holdings, creating stronger alliance with, say, like China and a few other countries. And so what we're going to have is like a domino effect. And right now, what the LME, because with nickel prices spiked up like over 1,200% over the last couple of days, right?
Yep.
This is going to have an impact on those contracts, right? Yep. And so what the LME came out and did with one of the Chinese owners of those derivatives is give them more time to pay that margin call. Because when something goes up like that or down like that, then they get what's called a margin call, and they have to come up with more money. Yep. Because there are unlimited losses, unlimited. And because we're all incestuously intertwined, I mean, we could definitely be having another Lehman moment. It could happen today. It could happen tomorrow. So people think we still have all of this time, but what we're seeing in the markets is actually telling you, no, we are running out of time, and the money markets are starting to freeze again.
So help us understand that a little bit. They're starting to freeze again.
Yes, the money markets are actually the global funding part of the global economy, right? Okay. So there'll be hedge funds or other banks, et cetera, that will bring collateral, right? So say nickel or gold or T-bills or whatever, they'll bring collateral and they'll borrow money for a short period of time. So right now what's happening is the fees, the interest is spiking, which indicates stress in money markets, right?
Gotcha.
Now, in 2008, when a money market fund broke the buck, in other words, it fell below $1, that was when, boom, they closed your ability to liquidate that. They also upped the FDIC insurance, which is a joke, to $250, gave money markets the same kind of treatment. But what they also did, more importantly, is they changed the rules and allowed fees and gates. And when they were creating these rules, they said, well, let's see, how high do these fees need to be to discourage people from taking their money out? Yeah. And then that's how high they set them. Kind of like retirement plans, right?
Yep.
If you have an IRA and you want to liquidate, well, you're going to pay taxes. Maybe if you're under 59 and a half, you're going to pay fees.
Some penalties, sure.
And penalties, right? And so they looked at this and they know that emotionally people say, well, look at this. I have $100,000 in my retirement account. They're not thinking about the taxes or the fees or anything like that. So if you have to pay them and they're 50%, they're going like, well, I don't want to pay that.
Yeah.
But what they don't realize, what people don't realize, there's that nominal confusion that comes in again, is number one, you will always be paying taxes. The question is, how high are those taxes going to go? Because that's how the governments fund themselves. And then also, and there are ways to recoup this, but then also, it discourages people from taking that distribution. And what are you doing? You're losing all the purchasing power. And a trillion times zero is still zero.
Yeah, one of the examples I try to give folks is I run with a lot of contractors who, build homes, do remodeling, they can understand the price of lumber. So I said, hey, imagine if you had, $100,000 in the bank a year ago, right? And you went off and you bought lumber, right? You'd have a truck full of lumber, right? Take that same $100,000. How much lumber are you going to buy? Much, much less, right? Conceptually, they get it. I'm going to buy much less. So from there, I share with them that, that is your purchasing power being stolen by the Fed, right? Perfect. By the Fed. Something very relatable to them. So just so that I'm clear, you have no confidence in the Fed.
No. No. I have confidence that they will screw everybody up and then deflect. That's where my confidence is. And oh, by the way, this is a $10 trillion Zimbabwe note, right? Yeah. You can't use it. It has no value.
Walk us through that, because you are a currency expert, right? You've studied this many times over.
I've been studying currencies since 1987.
So help us understand, the different cases, the different currencies that have gone through this, right? The US dollar is this is not the first time this is happening, right?
Oh, no. It's happened way more than 4,800 times. In fact, it's happened 100% of the time when governments have gone off of the gold standard or even the bimetal standard with silver, because this creates fiscal responsibility. Being able to just print money from debt or whatever other excuse they use, do you see any fiscal responsibility?
No,
today?
no.
You showed the balance sheet.
Yeah, no, not at all. And one of the things I want to share with the viewers is, just to drive this point home, is not just has it happened before. You look at what's happening today, and so we had the chart up there for the Federal Reserve balance sheet and how it's exploded, right? But you also look at what's happening today, like in March, where the Fed is looking to raise the Fed funds rate. And there's speculation, is it 0.25%? Is it 50 basis points? Who knows? But even here's how mixed up things are. If they even increase that, right? Along with that they should stop quantitative easing at that same point in time, right? But they're not. So they're going to raise the rate, but then they're also going to continue to do quantitative easing. Those are two different levers acting in opposing manners, right? They're not rowing in the same direction. If you're going to be rowing in the same direction as the Federal Reserve, you should raise rates and cut back on or stop your quantitative easing, right?
Right.
That's rowing in the same direction.
And by the way, the only difference between quantitative easing and modern money theory, where they can just print and print and print, right? Yep. Is that presumably there is an end date to quantitative easing, and I have yet to see it since they started in 2008. Yep. Maybe they slowed down a little bit. And by the way, also, here's a question for you, right? They've been talking about raising rates and running off their balance sheet since what, October, November? Yep. Well, what did they wait for? Why did they wait? Do you think they knew what was going to happen with the war actually happen, and so now they've got a great excuse?
Yeah.
And also, even if they raise them by shock, they call this shock and awe. 0.5% is shock and awe. Yeah. Well, that still doesn't even get them near the level of inflation, which is the theory at which then that should cut back on the inflation. But we're coming out with new inflation numbers, probably going to be somewhere 8% or north of 8% officially. It's much higher than that in reality.
Yeah.
And so a 0.5% isn't even going to get us to 2%. And they're not going to do a 0.5%. And they
Yeah.
only reason why they're doing it, the only reason why they're doing it is because they keep talking about doing it. So in order for them to remain credible, they have to do it. But real rates are still massively negative. And real rates for those that are on a fixed income, you own a bond and you're lucky if you're getting 1% and inflation is at 8%, and that means you're locking in minimum of 7% losses plus the loss of purchasing power and whatever you get back. It's abysmal. It's disgusting. I hate those guys. I hate them.
So what I want to do is I want to bring up this chart again. So just so the viewers can see. So Lynette keeps referring back to 2008 timeframe. Yeah, that's when the money printing started.
In earnest, and big time. It was going on before that, but yeah, right? Big time.
So 2008, because we're going to get into some gold charts here, and I want to just drive home the point. 2008 is really when this whole thing started. So no confidence in the Fed, and I'm with you there because of the things I see. It's all lip service. Their credibility.
And they're dangerous, actually. They're dangerous because they support bad behavior, right? They never change the behavior. They change how they account for the behavior.
Yeah. And they're actually talking about changing how the CPI is calculated again, right? Aren't they?
Yeah, why not?
Yeah, because
it'll make it look so much better.
It's not producing the result they want, so let's change how it's calculated to get the result we want.
Which is what they've always done. Hedonics, right? If steak gets too expensive, people won't buy steak, they'll buy hamburger. Hamburger gets too expensive, they'll buy hot dogs. So, I mean, that's how they do, and they hide everything so that you don't realize it and you don't know.
Yeah, so this is why you and I are chatting now, to share with the viewers what's really going on behind the scenes, the truth, right? The truth of things, right? Yeah. How screwed up the Fed is, right? I'm not making this up. We can show charts and charts of how screwed up things are. We're not making this up.
That was a Federal Reserve chart that you put up too, by the way. Anybody can access it. Put in purchasing power of the Fed. You'll see the official loss of purchasing power. It's there.
And you've studied this with other currencies, how the end state is not pretty, right?
No.
So we're not making this up. We have history that we can fall back on. So
lots of it.
Yeah. So the question becomes, right, to so that the viewers can see where we're going with this. The question now becomes, let's turn our focus to gold, right? Mm-hmm. And let's look at what I want to do is remember the 2008 time period. Here's a chart. So the blue columns are the gold reserves that Russia has, and the dotted line is the gold reserves of China. Mm-hmm. So what's interesting here that I saw was, look how stable it was for Russia up until 2008, and pretty much the same for China up until 2008. And then what happened, right?
Exactly.
It skyrocketed from there. Now, is that so help the viewers understand, is this just a coincidence, Lynette?
No, right? It is not a coincidence. The Bank for International Settlements did a phenomenal report in 2020 called about their foreign reserves and what place for gold. And in the conclusion, they said it all, really. And now, this is off the top of my head, right? But number one, this gold is the only financial asset that runs no counterparty risk. Mm-hmm. Gold held at home runs no political risk. It empirically shows you that it protects against inflation, and it is the true safe haven asset during political turmoil.
Yeah.
So and it's not just China and Russia that are
Yeah.
accumulating
Yeah.
gold,
Those are
right?
just two that I
Globally,
picked. You look at any.
because of what's going on, and they're getting together, right?
Yep.
But globally, governments, central banks have been buying more gold than they ever have historically. And actually, if you go into a graph and look at it before they became net buyers in 2010,
Hmm.
and again, this is off the top of my head, so I could be off a little bit. But I'm pretty sure it was like 2004 or 5. I think it was 2005 when the selling of the gold trend started to decrease. And look, are they really surprised by any of this stuff? They have intelligence. I don't mean they're smart. I mean, they have intelligence agents
Yeah.
that help them see what's coming and get into proper position for it.
Yeah. Yeah.
So, and that's because whoever holds the gold maintains their purchasing power and therefore their freedom, their independence, and their power. Because this is a small, movable asset, real money that you stick it in my pocket. I can go anywhere in the world and instantly have the same level of purchasing power. Tell me something else that can do that.
Yeah, and so I like to go to data. I like to go to history, and so what I want to do to drive home that point for the viewers is I want to go back to the ITM trading website. So this is your website, Lynette, right?
It is. Yes, it is.
So here's gold. Here's gold. It closed today. It looks like 2052. And so this is what Lynette is talking about, right? So, when inflation kicks in, look at what gold did. Gold increased in value. So you held your purchasing power by holding gold.
Yes. If we went back even further, remember, gold used to be $20 an ounce, and that's why this 1 ounce coin, which is a double eagle, has a face value of $20, right?
Face value of $20.
Face value. And there's some advantages to that. But yes, that's what it says on here. It says $20. Says it right on the coin. Now the new coins, the bullion coins, have a face value of $50 because the official US price for gold is $42.22. So even when you're looking at the spot market, you need to understand that the spot market on gold was created to manage, this is official, manage how we perceive gold. At 2054, it's still severely undervalued. How do you know that? How do you know that I'm just not making that up?
Yeah.
Because if you go back historically, and we've got 4,800 times, more than 4,800 times we can look at it, gold is the anchor. And even though we've been taught that it's just an old relic, well, you can see the central banks don't really think that it's such an old relic. They're accumulating it. And at the end of the day, when all confidence in this garbage is lost, they re-anchor, they reset, they restructure the money against gold. That's how it's done.
So
Not
it's
a thousand ways to do it. There's one way they do it, right here. That's when you will see gold expressed to its true fundamental value, which right now is close to $12,000. And the more debt they grow, the higher that number goes, and so much of it is hidden. So I would say that's rather conservative.
Yeah.
So yeah.
To use the analogy of, so if all these other countries are growing their gold reserves, should we as citizens, people, should we follow suit? Should we be increasing our gold reserves?
I am a very, very strong proponent that you should always do what the smartest guys in the room on any given topic are doing for themselves. And who knows more about money than central banks?
Yep.
It's pretty simple. So this is the choice that I have certainly made. But you need other things too to sustain a reasonable standard of living: food, water, energy, security, barterability. That's where, for me, that's mostly where silver comes in. Community, wealth preservation, and shelter. These are all the things that we need. And what the gold and the silver do, they're universal money.
Yeah.
They don't need a government to say this is money. They're both of these real money, good money, are used across the entire swatch of the global economy, every single area. So therefore, they have the broadest base of utility because, hey, they're used in medicine, they're used in the financial system, they're used for jewelry, they're used in manufacturing for computers and different things, right?
Yeah.
So it has the broadest base of utility as well as the broadest base of buyer. That is so important, and I never hear anybody talk about that, right?
Yeah.
When you're in a crisis, what do you want? You want where there's only one buyer? Guess what? Then they're going to dictate the rules or it's going to go to zero.
That's right.
But if you have lots and lots of buyers, it'll go up and down based on supply and demand, but there's always demand. Always. That's what you want. Period.
So one of the things I love about what you do, Lynette, is the whole education piece, educating
Yes.
us on what's happening in the world, right? Happening with currencies, happening with gold, right? You teach us all about those things, but then you also help us with putting a strategy together, right? We talk a lot
Yes.
about strategy, and one of the things I learned from you is not all gold is created equal. So help the viewers understand the difference between today's gold versus pre 1933 gold coins, for example.
Yes. And I know that I'm like pretty much of a lone voice, but personally, I've been studying currencies, like I said, since 1987. And you can see patterns. But even before that, quite honestly, I've been in this, studying this on some level my entire life. So I do like to talk about my Uncle Al because he was quite instrumental in my education and also probably, really why I know this as well as I do. So I don't care what anybody else says because I've got personal experience, right?
Sure.
And he was a major antique dealer, high end. So he'd go into very wealthy homes. And one day my parents and he was my favorite uncle. And one day my parents and I were at his house and he goes, "Come here, I want to show you something." And we went in the back bedroom and he said to my parents, he said, "If anything should happen to me, Aunt Bertie, his wife, would be well taken care of for the rest of her life because of what's in these safes." And I turned around to look, and he had two big floor safes, and they were packed with pre-33 gold coins. Now, this was 1965, which means it was illegal to hold more than 5 ounces of gold in any way without supervision other than this way. That was it. So, of course, I was 10 at the time. I didn't really understand what I was looking at, but knowing if I'd known then what I know now, I would say he had at least 3,000 ounces of gold, at least, probably 3 monster boxes or more in each safe. Since it was illegal to own gold in any other way, he had the kind of gold that was legal and he could use it in the normal marketplace.
Yeah.
That's key. That's critical.
Yeah.
So, having studied currencies and having studied patterns, what you see are repeatable patterns. Even yesterday and today, the world has said, well, not everybody in the world, but all of our allies have said that we will not take any Russian gold. But there was a caveat. No new Russian gold. They will take the old Russian gold. Okay, isn't that interesting? Why isn't all what's the difference? It's the same gold content weight, it's the same everything. It's in a different classification. So that kind of, in my mind, really reinforces. Because the other piece of that, you see these repeatable patterns, and even though I can't really guarantee what's going to happen tomorrow, I kind of think that if something's happened the same way 100% of the time, over 4,800 times, and we're doing the same thing, I don't know. I feel like my best shot is just to do what history tells me that is most likely to happen. So, additionally, because they have suppressed the price of spot so much, and they've done that because a rising gold price is an indication of a failing currency.
Yep.
But because they have done that so much, and because they reset the currency and gather public's confidence back in the new currency, since they've been robbing you of your wealth your entire life, I find it very hard to believe that at the end of this whole plan, they're going to go, oh no, you can keep your gold. True, not many people own it. However, most of that is held in IRAs. So I can't tell you exactly how it's going to look, but this is what I think it's going to look like. Because most people, I don't get this. I mean, I'm an ex-stockbroker. I'm an ex-banker. I don't get that how much Wall Street has abused us and people still trust them.
Yep.
So they look at it and they go, oh, wow, gold is only worth, $2,415. And since they want cooperation and no pushback, they offer $4,000 or $6,000. It doesn't matter. It's still so severely below what its true value is. But most people won't know that. And they'll go, oh, wow, look at how generous the government, the central banks are being.
When was the last time the government was generous to us? Right?
Yeah, exactly. I'm the government. I'm here to help. Duck, run, hide.
Buyer beware, I guess, or seller beware, right? So,
Exactly.
So how many times has the government, the U.S. government, done this confiscation of gold? Did they just do it once?
No. They historically, you have to go back, and if you think about the Revolutionary War, and then you think about the War of 1812, and you think about the Civil War, governments use fiat money, government-based money that they inflate to pay for these wars. So historically, we have a long history of that confiscation. And I don't think this time is going to be different either.
So again, we're going back to history, right? I like charts and I like history, right?
Yes.
And so history shows us this isn't the first time. And there, a lot of folks just know about the one time this was done, right?
Right.
But this is longstanding in U.S. history. The confiscation of gold has happened more than once.
Absolutely. And even recently in other countries.
Yeah.
India in 2016 demonetized their currency. In other words, if a government can say, well, this is money and you got to use it, they can also say, nope, no longer money. You can't use it for anything. So that's what they did with about 85% of their currency in 2016. And then because particularly India, although other countries this has happened in, but India, having gone through what they've gone through, they don't really trust the government. And so they wear their wealth, right? They wear it. And they actually went around and confiscated certain levels of gold from households. Not to mention the scheme, and this is true in Turkey as well, the scheme trying to get people to deposit their gold. Because when they go and they actually take it from them, people know, right? They know. But if they can entice you to deposit it, hey, this doesn't pay you interest. Go ahead, deposit it, we'll pay you interest. This doesn't have to pay you interest. It's the safest thing you can do because it runs no counterparty risk.
That's right. So we can go in so many different directions, but I want to ask the question from the standpoint of, what if the government tries to introduce a central bank digital currency, right? So that's kind of like what you're talking about is, hey, we're the government. We're coming in to help. We're going to give you a new thing called central bank digital currency. Give us your dollars. We're going to translate that into central bank digital currencies for you. It's all going to be digital. And this is going to help you, Mr. and Mrs. Citizen, right?
It's so convenient. And it's interesting because while the talk of, well, this might be happening, right? We're studying it. In the meantime, I'm going to have to go back and look, but I'm pretty sure it was 2019 in October. I know it was in October. Might have been, I think it was 2019, where they introduced, to great fanfare, I might say, the Fed Now account. And what they know, so that means that whether you realize it or not, every single person actually already has an account set up. That would make it so much easier just to push a button and deposit these digital dollars, because they need to keep things as close to what we think of as normal as possible. So they don't change the name, right? I mean, everything else changes. And it scares the crap out of me. I'm going to be honest about it.
Yeah.
Because when you had this, if the government wanted to tax you or do anything about it, actually you had control. If you didn't like the way the government was spending money, you would go to the bank with this and convert it into this.
Yep.
And that would pull the gold out of the system and create restrictions around what a government could do. So this was protecting the individual. It was also private, and it just really gave so they had to take the control of the public away, which they did in 33.
Yeah.
Once we got instituted, then we went to this. Now, when a central bank makes a policy choice, it right now takes about 18 months of going through this whole system to know whether or not what they intended to happen actually happened.
Okay.
So in addition to this, it was easy to inflate the value away, and you didn't know because, hey, it's still a $20 bill. Even though it doesn't buy me what it used to, it's still a $20 bill, right?
Yeah.
But you can take this piece of cash and stick it in your pocket, and it's out of sight. They can't see it. They can't really control it other than the inflation. So it protects your principal. It doesn't protect your purchasing power, but it does protect your principal.
Yeah.
When we go to a CBDC, that, my friends, is programmable money.
Yep.
Right? So they can track every single dollar that comes in, every single dollar that leaves. They can do lifetime taxes, which is what the government is talking about. And the central bank can go, there are no limitations on how deeply they can push negative rates. So since we are a consumer-driven economy, if they want us to consume and we're not consuming enough, we're trying to save, well, they just hit that button and you can sit there in real time and watch your principal evaporate.
Yeah. So the idea of having programmable currency, right? Let's
Scares the Hades out of me. It does.
It absolutely. I was just having this conversation with a friend just yesterday or the day before, talking about, say we get another round of stimulus checks, right? But they're not going to come as stimulus checks. They're going to come as stimulus central bank digital currency. And oh, by the way, to your point, it's going to be programmed such that certain amount of that is going to be programmed to be able to purchase an electric vehicle instead of a gas vehicle, right? So if I was looking to purchase a vehicle and I was looking at a gas powered vehicle, now I'd get this digital currency and I can only use it to purchase an electric vehicle. So that's a way the government is programming the currency to force you, the consumer, to spend in a certain way. And it could also have an expiration date associated with it, right?
Exactly.
Right? So these are things,
so you have to spend it by this time or it goes away. And and that's China's been experimenting with that. So, there's good data.
And again, this is not something that you or I are inventing or making up as we go along here with this conversation.
No.
This has been going on for quite a bit of time here, right? To your point, China already has this out there, right? So,
right. And honestly, they've been moving in this direction since the 50s. That's really what the credit cards. Oh, yeah.
Since the 50s, I didn't know it went that far.
Oh, yeah. I mean, these guys are brilliant. Plus, they hire the most brilliant minds in psychiatry and psychology to craft how it's called perception management.
Yep.
Reagan actually formalized it when he brought Rupert Murdoch over and changed the rules so he could come over and manage the media.
Yeah.
And look at the media. You've got 6 owners of all the media, and it's really probably 2. It's probably Vanguard and BlackRock that own everything. Anyway, so we just have the illusion of choice. I know. We just have it's so many ways that we could go, but we just have the illusion of choice. And what the central bank digital currencies will do is most likely destroy that illusion. But that's all it is. And that's why you got to have physical gold, physical silver out of the system because you can make a deposit into the system and have it convert into the current currency, but you can keep your dry powder
Yep.
so that you're only depositing it at basically as you need it.
You're preserving your purchasing power by holding the metal, the gold, the silver. You're preserving your purchasing power is what you're doing,
Yep.
right? So you've educated
Exactly
us
it.
on why we need to hold gold pre 1933 coins, right? That's what we'd want to
It
hold.
really is, Tony, part of what I always look at when I'm looking at anything is what happens if I'm right and what happens if I'm wrong.
Yeah.
And if I can make a choice where it doesn't matter whether or not I'm right or wrong, rock and roll hoochie coo. That's the choice I'm going to make.
Yeah. Yep. No. So some of the folks I chat with, one of their questions becomes, so how much should I hold, right? How much gold should I hold? Is it a certain percentage of my portfolio? Or, as we're talking here, how much should we hold? Should we calculate it based on what's coming down the pike in terms of the Great Reset, right? How do I calculate how much gold I should hold in a safe, right?
That's a great question. And, I'm going to say it depends. But if everybody should start with their goals. So one of the things that we do at ITM, based upon all of my research and a strategy that I created for myself before I even came to ITM, that helps you determine how much you need. So the first thing you need to do is establish what you're trying to accomplish. Maybe you have a crypto portfolio. Maybe you have, we were talking about real estate before. There are some dangers that happen with real estate taxes and mortgages during these periods of time. Also, maybe you've got a stock portfolio that you can't liquidate. Maybe it's in a 403B, which gives you like no choice, or a 401k or something like that. So I can't give you a blanket answer because it depends on what you're trying to do and protect. For me personally, as an ex-stockbroker, as an ex-banker, I have some of this because this is still our tool of barter, and I have employees and I have to make sure I can pay them and run my business. But frankly, and I'm not telling anybody else to do this, I believe my research because I know how deeply I dig. I don't own any other fiat money products besides this. That means that this is where I make the choice to hold my wealth.
Gotcha.
This is the lion's share.
Gotcha.
And you also notice that I'm always wearing jewelry, and that is because gold and silver I want everybody to know. Now, I'm not saying rush out to buy jewelry because it's a much bigger markup. However, gold and silver in any form is monetary at its base. So there is no doubt in my mind that the lion's share of my wealth, this is the form that it's held in.
Yeah.
The silver, for barterability, I looked at my current cost of living, my children's current cost of living. So there's a certain amount of silver that I need for that. Okay. And there's all different kinds of gold depending upon what you're trying to accomplish, even inside of the collectible category. But the collectible category, if people are going, well, I still don't know. Here's an easy way. This is an easy way to know what kind of gold that is okay to buy and what is more dangerous to buy. And that is, if you can hold it inside of an IRA, I don't own it.
Okay.
Because it's easy to take away.
Yeah.
And if you don't hold it, you don't own it anyway.
Yeah.
Right?
Yeah.
So it really does depend. And then the other question you have to ask yourself is, how much am I willing to lose?
Yeah.
Because the loss of purchasing power is absolutely guaranteed. We're watching it in real time. And to your point earlier, we ain't seen nothing yet.
Yeah. 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 So you hold dollars today to be able to run your business and execute day to day. You hold a certain amount of silver, and we all need to determine that for ourselves, right? What that
We
amount
have
needs to be.
formulas that can help you. We have formulas built into the strategy. I just did some for some people at the last event that we were at with George.
Yeah.
So it's not that you have to necessarily determine it. We can help you determine how much that is,
Okay.
but it's
Excellent.
based upon your current cost of living.
Okay. And then you try to preserve your wealth by holding gold, which you can always convert in small amounts to silver for barterability, right? Or silver into dollars should you need more dollars to run your business, right? So there's a strategy there to be able.
Absolutely.
So that's what I love about you guys is, again, I go back to the education piece. You guys are incredible with sharing the history, sharing the charts on what's happening, right? We're not making this stuff up.
Give you links. I love to, that's all my work. I give you the links to all my research.
You do.
Is right. So, don't take I don't want you to take my word for it. I want you to do your own due diligence. I want you to think for yourself. Even if you disagree with me, that's okay. I will defend your right to do that as long as you've done your due diligence.
Yeah.
If it's just a random opinion,
Yeah, it gets dismissed. No, I
right.
get it. No, I'm always fascinated, and we can chat for hours about this stuff because I love chatting with you about this stuff. I'm always learning every time we get together and we talk about this. So, Lynette, I'm always fascinated by your depth of knowledge around the topic, around the fall of different currencies in history, and then also obviously your knowledge on gold and silver and what to buy
Real
and what
money.
amounts. Excuse me.
Real money.
Real money, exactly, not the fiat crap out there. So if folks want to get in touch with you to learn more and strategize a bit more, what's the best way for them to get in contact with you?
Well, you showed the website up there, but we also have, so they can call in and you'll be connected with a consultant that understands the strategy and can help you figure out how much silver you need, what kind, how much gold you need, what kind. So just have your goals. And even if you don't know really how to create those goals or say, well, I just want to be safe or whatever, they'll ask you questions to determine what you're really trying to accomplish. And but we also have the YouTube channel, which is where I produce a lot of content. And these days, way more content because things are moving so quickly.
And that is huge. And thank you for doing that. We're going to see how things go over the next couple of months, but you've definitely given us a lot to think about. And I encourage the viewers to take a look at ITM trading. Hopefully we still have some time to correct some things if we need to correct some things before the great reset happens, so that you're protected for the future.
You need a plan. I mean, they have a plan. And by not planning, you're planning to fail. People think they have all the time in the world. These things have been building slowly, slowly, slowly until it's fast. And I would always rather be 2 weeks, 10 years. I don't care how early I am because I don't want to be even 1 second too late. That's when you lose all your choices. And I have to say, the level that we are right now, that could happen at any moment.
Yeah,
I mean, seriously, any moment.
No,
The spiking of the commodities, even though you're not hearing about it, it is triggering derivative bets. There are problems here.
Yeah,
If you wait until you know about it, it's too late.
One of the things we try to do is try to help the folks who go to work. They have their head down. They're raising families. They're going to work. They're busy, right? They're not looking at commodities. They're not looking at derivatives. They're not looking at the price of gold. They're not looking. And it's not because they're bad people. They're good people. They're just going to get screwed by what the Fed is doing and what this government is doing. And not to get on a soapbox, that's not my intent. My intent is to help people, right? Truly to help people, to help them see what's going on in the world and take some action, right? That's what you and I are trying to do. We're trying to get folks take some action. Don't just put this on the back burner, right? Go to ITM Trading, look at their website, formulate a plan with them, and start taking some baby steps to protect your personal and financial freedoms. Well, Lynette, thank you so much for your time today. I truly appreciate it. Thank you for coming on to Dirty Boots Capital. And, maybe we can have you back in another couple of months and see where we stand with the Federal Reserve and all this money printing.
For you, Tony, anytime.
Maybe in a couple of months here.